As we go from September to October, as we go from the third quarter to the fourth quarter, there's no guarantee that suddenly the fourth quarter is going to just be up, and away in terms of strength. So I would highly recommend still being really cautious and patient with the indices because the clarity is not the best here. I am definitely going to be looking for different opportunities to be long the Dow and the S&P because if account growth is about finding follow through and getting long in places where the continuation is more likely, that's really Dow and S&P. In fact, the Dow is the only uptrend that we have amongst the four indices. The next thing we're thinking about is, all right, Rog, if the clarity isn't there, let's take a look under the hood. Now, many of you who watch these videos know that I love looking at normalized performance of the key sectors that are weighted within the indices. So, for example, if I'm looking at the Dow, I'm looking at financials, I'm looking at technology, healthcare, energy, industrials, transports. These are the heavily weighted sectors in the Dow. And depending on what's happening in those sectors, the Dow is going to move a certain way. And if we know the heavily weighted sectors in each index, it makes sense why the NAS has been lagging. I have not been doing much of anything in some of the more magnificent 7. They're not really all that magnificent right now, but I really haven't been focusing a lot on the magnificent 7 unless they're weighted in communications or consumer discretionary. This is the difference between looking at a setup in the NQ and then looking at all 7 of the magnificents, right? So Apple, Microsoft, NVIDIA, Meta, Google, right? And NVIDIA. Oh, I did NVIDIA. And Amazon and Tesla. All right? You look at all these, and then you ask yourself, where are they weighted? Well, Amazon and Tesla are in XLY. Meta and Google are in XLC. NVIDIA, XLK, and SMH. Microsoft, XLK. Apple, XLK. So just that process alone gives us where continuation is. Find the continuation, grow an account. In fact, we've already taken a winning trade in Amazon. I'm not in any way thinking we may not get back into that symbol again. If you're looking at XLC, Google is definitely one you can keep an eye on. Meta would be another one. Verizon, Disney. These are strong symbols in XLC. So right now, the leaders are where not all of the NASDAQ is sitting, but 2 of the 4 major sectors in the NASDAQ. So we want to continue to focus on strength in utilities, metals and mining. We've actually put 2 trades on in the last 2 days in consumer discretionary. Right? We got long positions there. Stick with the long side of the strongest names. So that means I'm not focused on financials or regional banks or oil services, or even healthcare right now. Even semiconductors don't look all that good at the moment as we're kicking off. It's a 1-month look back. If I take a look at the last 5 days, just kind of drives it home all that much more. What else do we want to put on the watch list? Industrials, as well as home builders, home construction. I think those are definitely going to be, and basic materials. So these are not the symbols that everyone's talking about, are they? And that's where we have to be thinking about what those 3 steps to account growth of any size, most especially small accounts, are going to look like. Tomorrow, I've got the webinar for our small account growth plan class, which is happening this Saturday, October 5 at 1 p.m. I know a lot of you still have some questions. You want to see a little bit more about our trade results and trade process. So tomorrow, Wednesday at 8 p.m., we've got our webinar. You can register at simplertrading.com/reliable. But I want to walk you all through a little bit more about what we're doing, and think of it a little bit as a pyramid. And if I think about it that way, we think about what is the most important, what's the base? And I probably should have put, here we go. I probably should have put the base at the bottom. But the base of everything is step one, manage risk, AKA stop blowing up an account. Stop losing money in the account. Stop losing, right? That's step number one. Once we get the discipline of that down, then we go on to step number two, which is a lot of what we've been talking about here. Finding follow through, finding things that once we buy, we'll keep going. What are the 3 positions we put on yesterday? Just yesterday, gold, Newmont Mining, consumer discretionary. What are the 3 winners we took off the table today? Gold, Newmont Mining, consumer discretionary, right? So finding follow through is a big part of the plan. Get this part wrong. It doesn't matter how well you manage risk. If you can't find things that pay you by following through, no account growth. All right. And the last part, and this is really where it gets exciting. This is where we build a custom type. This is a stage, and this is what's going to be covered in the class, right? This is where we build a custom plan for account growth, rooted in how to manage risk and finding follow through, right? So the custom plan is, all right, Rog, once I know how to manage risk, I get to choose how much risk I'm comfortable with. All right. Once I understand what to trade, now I know how aggressively I want to trade choppy markets or trending markets. And then I can start to position size in a way that, again, is going to agree with your percentage or dollar expectations. So if you have a more aggressive approach, there's a plan that will suit that. If you're okay with a little bit more conservative approach, because there's always a trade-off, gang. You know, more aggressive means you've got to be comfortable with a certain amount of risk. Less aggressive, again, that's another risk level. But it's not one size fits all. This is not a ball cap. And a lot of traders struggle because they get handed a one size fits all approach, when in reality, there are small account issues to deal with. Sometimes, by the way, gang, large accounts have issues too. Really large accounts have a different type of issue. So the reason we focus on a custom plan is we always want to focus on growth, but growth for your risk tolerance and your reward expectations. So you can build something that you will in fact follow versus kind of discard because it wasn't ever what you wanted or needed. All right. Now, the cool thing about all this is I'll give you some more SPX examples in the webinar tomorrow, but this is what we're going to be covering in the class, just to give you an idea. So we'll be covering what I've been testing now for 6 months, and that's how the SPX can supercharge your account growth. I'll tell you what, I am the last person I thought would be saying this, but what I've been testing the last 6 months tells me that if being very much rooted in the plan and discerning, there are ways that even small accounts can trade SPX. And if you have a large account, completely different conversation, because now this is not something that's going to be as challenging because you have the dollars in the account, right? But how it can supercharge account growth. Super stoked. I'll see you all tomorrow for the webinar. The class is on Saturday, the 5th. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.